Here we go, everyone. This is the famous DXE, Deutsche Bank Energy. Unlike commodity, the CRX, these things have been taking bloodbaths and given up all calendar 2011 gains, as we said they would, because we said that there was going to be a lot lower growth back in the first part of 2011 and toward the end of the year, that all the high-flying commodity stocks and energy stocks that had the greatest uptrends would have to come all the way down. And once again, energy stocks have a way of selling off and showing that they're pricing in recession. Not if there is one, that there is one. And these are some of the great names that are in here. You got Oxy, OXY, buddy. You got SLB. You got some very good names. EOG. You got the CVX in here. Some of them are getting really on sale in this. But let me tell you, just like the other ones we did, we're at a very major a weekly chart right here. And we're at a major weekly low. And we are. And I'm going to tell you that the index is down here because all the names have been getting torched, and we're going to find them on sale. The best of the breed, that is. And because we know how to pick the best of the breed, it's not like we've traded these individual names one time. We've been trading them for a number of years, and we trade these great bull rallies, and then we sell the bear. We sell decelerated growth around the world is in play, and that's why this thing is back here. And they did the same thing back over here in 2008. It priced in the recessions, as they always do, and they did. And they go down further, and the stocks price it in ahead of time. That's another good way to gauge worldwide economies: slow growth, good growth, bad growth, no growth. It doesn't matter. What matters is when there is going to be growth and expansion, you come up, you make all-time highs, you pull back, and we went as far as we could, and everyone else was wrong about GDP. SMF called that yearly analysis before 2011 started, that all the bulls were all the way in the market. They were all piled in there. Fund managers were buying everything up at the time over here, just enjoying those 2010 lows. But when we got up here and things started to turn, they never sell them. They never do. And we're at critical level there. That's the weekly. We're getting oversold down here on the percent DS on a weekly standard. 200-week moving average is at 1143. The 100-week moving average is at 1162. And we have broke all key weekly moving averages and severe bear trends that create buying opportunities based on where growth around the world will eventually come into play. It's not the end of the world, you know. These companies are still going to make money. And over here on a daily chart, when you take a look at it on a daily level, I am at right here on a daily level at the best area, because if I break it, I got no support till, you know, there's support down here potentially, and this is where the breakouts happen. But let me tell you, they priced in recessions back in 2008, and they sold down before the rest of the broader market. And all of these names that we are covering, and there's a long ways that we could go down, but somewhere along the line, international earnings are going to come into play. We've got some great companies. We're going to be setting alarms here. We're going to go through the individual equities right here that's in here. And we already did APA. We're going to take a look at where EOG is. We're going to take a look at even where Diamond Offshore is. And, you know, is the administration assaulting some of these companies and their policies in Washington, D.C.? You can scratch your head on that one and say, hey, well, let me try to figure it out. And once you do, come back. We already know that answer. So the thing about it is, price action is king, valuation is king, getting things priced in the October upcoming earnings is king. This is, once again, the Deutsche Bank Energy Index.